Hello everyone, welcome back to my channel. In today's video I'm going to show you the difference between a spot market and a future market. If you are new to the cryptocurrency industry, then you must be struggling to understand the difference between a spot market and a future market. But if you are a victim of that, don't worry. In this video I'm going to show you with real life example the difference between these two types of market. But before I get started, if you are new to my channel, please hit that subscribe button below. Also, if you find this video helpful, please smash that like button so that others can see this video. So without wasting much time, let's get started. So first off, what is a spot market? A spot market is a normal life market. What do I mean by this? It is just like the normal buying and selling that we do on everyday basis. Let's say you find a product so cheap, you can use your fiat currency, in my case Nigerian naira, to buy it and then wait for a future price whereby the price of the asset must have risen, then you sell it and make some profit. So that is what is happening in the spot market. But in a future market, you don't necessarily buy such products. What you do in essence is that you give out your money in betting. What do I mean by this? Let's say you have US dollar or Nigerian naira. You give out your US dollar or Nigerian naira to the owner of such products and enter a contract, like a bet that the price of such product will rise in so days in the future, and when you get back to him, he will pay you based on the price of such assets at that point. So that is what a future market is. So let me give you an example with this Bitcoin USDT. Let's say after technical analysis, two traders discovered that the price of this Bitcoin USDT will start rising in a moment. Then let's say the spot trader has 1,000 USDT on his spot wallet, while a future trader has 1,000 USDT on his future wallet. Then what a spot trader does is that he uses either a percentage of his USDT to buy this Bitcoin, or the whole 1,000 USDT to buy this Bitcoin, then and wait for it to appreciate. But on the other hand, what a future trader does is that he gives his USDT, either percentage of it or whole of them, to Binance Exchange, and they will lock it, entering a contract that at some point in the future he will sell. That means he will quit out of the market, and the Binance Exchange will pay him based on the current market price then. So let's say after they have placed the trade, the price of Bitcoin started rising from this 18,132 USDT. Then it started rising till this their predicted point, which is $63,346. So the spot trader can sell his Bitcoin back to USDT and convert it to his fiat currency. On the other hand, the future trader can quit from the contract, and then the exchange will reward him based on the current market price of Bitcoin at this point. But let's say these two traders bought this Bitcoin at this point, so expecting that the price of Bitcoin against USDT will start rising in a moment. Then let's say unfortunately the price started falling. As a spot trader, you use your USDT to buy the Bitcoin, so you have the Bitcoin credited to your spot wallet. But on the other hand, the future trader doesn't have any BTC. He's just entering a contract using USDT as a collateral. So let's say the price of this Bitcoin started falling. It can reach to a certain point whereby his USDT, that for a future trader, will be liquidated, and he will be gotten out of the market without any gain, without any remaining account size. But on the other hand, a spot trader can be liquidated. What I mean by this is that he has his USDT, so he can wait for years, decades, depending on how patient he is, holding back his USDT. And let's say after some years the price of Bitcoin started appreciating again, then at some point he can sell back his BTC and either break even or make some profits, while on the other hand the future trader must have been liquidated on the process. Another thing about future trading is that they allow you to use leverage. What is a leverage? Leverage is just like giving you a multiple of your account size to be used to enter position in a trading. Let's say at this point whereby the price of Bitcoin was 62,804 USDT. Let's say as a future trader you have $1,000 account, then Binance basically allows you to use 5x leverage, 2x leverage, depending on the one you want. Let's say you entered with 5x leverage, meaning that you are using $5,000 to buy Bitcoin here. If this market started liquidating, you know that your real money is $1,000, and when you are losing from this market, your loss will be calculated based on this $5,000 you are using. Based on this $5,000 you are using. So on the process, your account can be got liquidated at some point here, and you'll be taken out of the market. While as a spot trader, you don't have access to leverage. So no matter how the price of Bitcoin falls, you still believe that it will still rise again in the future, and you can come back and look for a better price to sell out your Bitcoin. So let me show you some differences between a spot market and a future market. In future markets or in future trading, you can benefit from a market even when the price is trying to fall. Let's take for instance, as you can see right here, the price of Bitcoin is around $69,000. Let's say as a future trader, you discover that the price of this Bitcoin USDT will start falling in a moment. You can actually enter a contract that the price of this Bitcoin will start falling, and then give your USDT to the Binance exchange, and they will lock it. That is without you having access to it. Then let's say at some point in future you can come and say, I want to quit from the market from here. So they will calculate the price difference between this point and here that you want to quit from the market, then and pay you based on the price change. But on a spot market, when you discover that the price of Bitcoin will start falling here, if you don't have the Bitcoin in your spot wallet, you can't sell it and you can't buy it at this point, because if you buy it at this point, the price will start decreasing and you'll be losing instead. So that's basically the difference between a spot market and a future market in terms of price movements. Another difference is leverage. A future market allows you to use a leverage. Let's say this trade here, let's say you entered with a leverage as a future trader. Let's say you have $1,000 account, and then you entered this trade with $5,000, which is a 5x leverage. Then your profit will be multiplied by 5. While as a spot trader, his profit is just with that $1,000 account, which means that you are 5x ahead of future trader. So that's another advantage of a future trader. You can use leverage and maximize your profit. But remember, on the other hand, it's still very risky, because if you would have lost this market, your loss will be multiplied by 5, while that of a spot trader will be multiplied by 1. So, and another difference is that when you enter a future market, you don't have access even to that USDT. The only thing you can do is to close the market or quit from the market. While as a spot trader, assuming you bought Bitcoin, you can transfer it to other exchange or to your trust wallet. You can trade with them, you can send it to your friend, you can send it back to here, meaning that you have the whole access to it. You can do anything with it depending on where you want to sell it. You just come back here and sell it, or sell it in other exchange. But when you are entering a future market, once you click execute, once you click buy or sell, you don't have access to that particular coin until your contract expiration date is reached. And that's the basic difference between future trading and spot trading. And that's the end of this video. If it was helpful, please give it a like. Also, if you have not subscribed to my channel, please do that by hitting that subscribe button below and turning on notifications so that you'll be updated once I release a new video.